This is Smart Investing with Mike Wren.
He's funny.
Yes, he is, but he can also be biting.
He bites people?
Well, with his words, not with his teeth.
Securities and advisory service offered through KMS Financial Services.
This is Smart Investing with Michael J. Wren.
Someone leaked your new salary? Occupy Wall Street is having a conniption.
Really?
They burned you in effigy.
With Michael's producer, Chris Martin.
Why isn't your show good? The writing, the host? I guess my jokes could be better, but I'm not willing to put the work in, so the production value sucks.
This show is live.
And call-ins are welcome.
Or you can email us your questions. Go to smartinvestingshow.com to see how.
For I have the pride, the privilege, nay, the pleasure of introducing to you the one, the only.
This is Smart Investing with Mike Wren.
Well, hello, everybody. We're back with Smart Investing. I'm Mike Wren, your host. The telephone number here to the studio is 509-241-5900, and you can find us on the web at smartinvestingshow.com. So, let me tell you something here. The first hour, I was trying to get a little bit inside your head, be a little bit touchy-feely, really try to help you, really try to remind you, to state the obvious, that a lot of people got hurt really bad financially and emotionally when the market went down. And now that things, hopefully for you as a listener, investor, are back to even or better than that, means you're not a client of mine. No, I'm kidding. So they hopefully now that you're feeling a little bit more at ease, but you're not really ready for anything. You're not ready for new types of news. You're kind of ready for more bad news because you know it's just people whipping it up. You've seen it before, as Chris said. But you're not really ready for good news because good news is so much different than what you've been experiencing for the past 5 years that you're not ready for it. And because you're not ready for it, you're going to be cynical and you're not going to believe it. Right?
That's just kind of, hey, you look really good today. All right, yeah, thanks. Or, man, those pants make you look fat. I know, right? You know, that's just kind of the way we are.
That's perfect. That's the state of mind. You just did the state of mind that the average investor is in right now. That's a perfect way to communicate it to you.
Well, I've got a question for you.
Okay.
Is this all right now? Or
Yeah.
Okay.
Yeah.
You know those people that we say, man, I hate these people. You should lead us. Could politicians really screw this up? The whole. So I mean, is there a way?
Yeah, well,
I know we say we don't ignore them, and
you're kind of jumping ahead, but yeah, I mean, they can't screw things up. It's good that you brought
even
that
with
up.
all the arguing and all the stalling and things that politicians do,
because we have to reduce it back down to. Let me back up a little bit. Make sure I answer it in a second, but let me back up. Is that if you were too fearful before as an investor and you got too hurt because of the situation, you didn't realize the situation you were in, okay? If we rewind the tape back 5 years and you actually knew back then what you know now, you as an investor, you'd probably be hurt a little bit less right now. You'd probably be in a little bit better emotional position right now, wouldn't you?
Well, yeah, I could see it coming.
Well, not really see it coming, but you've been through it before, because even Warren Buffett didn't see it coming. That's why I don't want to try to imbibe anybody with any sort of clairvoyance, because none of us have it. But you'd be more seasoned. You'd have a little bit more wisdom where the emotional whipsaws aren't going to affect you as bad. So if we could rewind the tape. Now, most people are going to say, well, I would have yanked everything out of it because it was going to continue to go down further. That just shows how ignorant you would have been, because we're talking about 2008. The market started going down in 2007. The dip from 2008 down to the low point, then back up again to where it was about March of 2009. That's a short enough period of time. Do you think McDonald's profit in those few months changed that much? Or Walmart, or Coca-Cola, or Mattel? I mean, you name it. There are some companies, like mortgage companies, yeah, it did affect them. But
just a little.
Yeah, but I'm talking general, big picture. Most of the businesses in the world that we would have access to as investors, it didn't affect at all. But you acted like it did. Now you realize, hey, yeah, People are still eating hamburgers. Okay, my McDonald's stock is okay. So, rewinding back the tape 5 years, you probably wouldn't be so sociopathic over this time. So you probably would have kept your money invested if you put it in cash, or you probably would have been just feeling better. That's what I'm trying to get at. Just imagine if you got hurt less over the last 5 years, how you'd feel now. You'd be ready for the seasons to change. You'd be ready for spring.
So it almost feels like you're talking about a few first-time investors
that
have been investing.
This type of market in 2008, everybody's a first-time investor.
Okay, true, I get that.
Yeah.
Because it was something out of nowhere.
Well,
and it was hugely affected everybody.
It's happened before, but not to any of these people that are currently alive. That's truly the way to say it, because even Warren Buffett wasn't alive for the Great Depression.
Oh, really?
Right. He's he looks that old, but he's not.
He wears it well.
Hello, how are you doing? He had that big horn in his ear, you know. But yeah, so nobody saw a 2008 before with their own eyes. Nobody felt a 2008 before. That's why everybody's on the same playing field. The only thing, it's why I'm talking about emotions, because none of us lived through that before. Some of us read about it. Some of us knew that it could happen. Most of us didn't. So it's our perceptions and how we are emotionally and what scares us and doesn't scare us that separates the people that have made money so far from the people that have not. And you've got most of my industry trying to tell you, yeah, you should be scared. That's why you should buy this stupid annuity. Okay? When you have people telling you, yeah, it was okay to be that scared and you should own this annuity, it'll keep you from being scared. Well, you know that no matter what type of medicine you take, the pain is still there. It dulls it. You know that even opening an annuity isn't going to make you not feel fear. So, yeah, it's a non-starter. But what I'm trying to get at is that if you actually felt less pain back in 2008, right now, you'd actually have a mind that's more open. You'd be looking at, you could actually see that things didn't get so sucky bad that everybody told you that they were. And you're actually seeing, wow, things weren't as bad as what people thought. And I can see kind of the worm turning a little bit as far as economic activity. So don't forget, I want to come back to your question because it's very, 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 very timely. But here's what people aren't ready for. And I'll tell this before we go to break because you may want to call on it. Everybody can quote chapter and verse, 10 reasons or stories of the negative fashion, and you can probably do it in your sleep. This is what's wrong with the world, with our economy, with our politicians, with me. Blah, 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 blah.
I got a book.
They can chart 10 of them instantly. Here's what you're not ready for as a human being with investments. You're not ready for politicians to come to agreement quicker than they have in the past 4, 5, 6 years. You're not ready for auto demand that exceeds what anything that we've seen over the last 5, 10 years. You're not ready for housing to pick up. You're not ready for the housing market people just aren't ready for more good news. Just think what would happen if we do get higher auto demand, which we've already seen. The housing market can't stay down forever. We get increased housing, increased economic activity with the housing market. We get Congress that comes to agreements. They're never going to come to good agreements. I didn't say good agreement. I just said an agreement. They're going to come to some sort of an agreement.
If they kept coming for more good agreements, you'd start to think, well, somebody's pumping some kind of gas in that place.
I'm going to tell you their agreements are going to be horrible, but they're agreements nonetheless, okay? So they come to agreements more quickly than they have in the past. Then we have more manufacturing in the United States because of the aerospace industry and maybe because of some infrastructure, because you can only put off building roads and redoing bridges for so long. Guess what that would do to the economy and your investments? You haven't even thought about it because you were so hurt. You're just thankful. Call 509-241-5900. You can find us on the web at smartinvestingshow.com, and we'll be right back.
Any opinions expressed herein are given in good faith and are subject to change without notice and are correct only on the stated date of issue. Past performance is not always indicative of future results. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Security, financial instruments, or strategies mentioned may not be suitable for all investors. Prices, values, or income from any investment mentioned in this report may fall against the interest of the investor, and the investor may get back less than the amount invested. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as a recommendation of particular securities, financial instruments, or strategies to you. Before acting on any recommendation on this material, you should consider whether it is suitable for your particular circumstances and, if necessary, seek professional advice.
You know, when I was 30, people used to wish that I was dead to my face.
Hey, we're back with Smart Investing. I'm Mike Wren, your host. Telephone number here to the studio, 509-241-5900. Oh, my God, look at the phone lines light up. Welcome to Fargo, where it's 0 degrees and it's 0 degrees Celsius and it's foggy as all. Is it still foggy? It still looks great.
Yeah. We're in London.
Well, London, at least we'd have some of the straightest teeth if we were on there. So anyway, we are back. And what I'm trying to do is this hour of the show, I want to try to prepare you, the investor, for what you're not prepared for, okay? So let's say what you're not prepared for. If it was, what I wish I could do is, I wish I would have thought about this a little bit more, is that I wish I could look up temperatures, like the highest temperatures on record for Spokane in February, because it would probably be some high amount, and I could say to you, are you ready for this kind of a degree of temperature? And most people out there will say it's not going to get that warm because it's February. And then to show them the proof that it's been, let's say, 65 degrees in February before. How many people?
I get it, yeah.
How many people would be ready for that? And they'd say none. How many people would love it? All of them. So we have a caller on the line?
Yes, we do.
Okay.
Sherry.
Okay, hold on. Punch the button. Okay, Sherry, thanks for calling the show.
Hi, Mike. I just wanted to make a comment about last week's rally and in the stock market and something that Jim Cramer said, and I wanted to get your take on it to see if you agreed,
okay.
And I think you will. Whereas he said, if you're making a lot of money in this rally, you're probably doing something wrong. And I looked at what I have last week, and I thought, because I looked at it and I thought, well, gee, everything, the stock market's up, but I'm not so up. But then I realized I had a couple of stocks that took hits last week, ConocoPhillips and Merck. But so all in all, by the time the week was over, in spite of those big hits, I was still good, and I'm happy with that.
Well, how do I say this? I don't understand. Because Jim Cramer said that you're doing something wrong if you're making money.
He basically said that it was kind of twisted around how he does sometimes.
Oh yeah, he's almost too smart for everybody's own good, including
but
he's
it
intelligent.
Basically, you must be taking too much risk.
No, I disagree. Then.
Oh, okay. Well,
entirely.
Riff on that a bit.
Okay. The reason I disagree is that you just had some big bellwether companies like Procter & Gamble have amazing earnings.
Mm-hmm.
I mean, amazing earnings in a 2 or 3 week scenario. If I'm not mistaken, I could try to bring it up here if I was an actual radio show host, but I just impersonate one.
Yeah.
Let's see here. Let me try to look at the last 1 month of Procter & Gamble stock. And this computer's actually kind of quick. I'm very much surprised. Well,
they fed the gerbil this week.
No.
So he's all hyped up.
The picture isn't up yet. You know how the words, when you load a Pamela Lee Anderson picture, the words come up and then it takes longer.
I've never done that. Go on.
Gosh. What are you, 80?
I'm just trying to be random. Yeah.
Okay.
So back on January 7th or so, January 8th, the price of Procter & Gamble was $68.51. Okay?
Mm-hmm.
It closed yesterday at $75.92. That is a huge move for a huge company
that
does business worldwide.
Right.
That's what's right with everything. There isn't anything wrong. And if you did make money, it doesn't necessarily mean that you're doing things wrong or right. And if you didn't make money, it doesn't make it because it's only a month.
Right.
And that shows that Jim Cramer falls into the same trap as most of people in my industry, trying to make a mountain out of a molehill.
And he was saying, that when we have these rallies and things are up, that if you don't have some cash to use to take advantage of when maybe there's some dips and some things that you've been looking at, but that's the time to raise it.
Yeah, well, no, it's not the time to raise it.
Okay, would you riff on that, please?
It's because we own businesses. He has a daily show. That's
right.
What's wrong.
So he has to say something.
Right.
Yeah.
I only have a weekly one, and my God, can you imagine how horrible it'd be if it was daily?
Well, what drives me nuts is when they, when they say, and how would you be playing this, and the way somebody would be playing it is different on Wednesday than the way they would have played it on Tuesday.
Right.
And it just drives me nuts.
Yeah, and that's why I tell people that they should drink heavily when they watch those shows, so they forget that.
All right, thank you. And I really wish that I had not missed last week's show because it sounds like you were admitting to being rude and crude and obnoxious.
No, I was just in a bad mood. I'm all those other things, but yeah, I just didn't feel like talking to the public. I didn't want to give any free tips. I was tired of the free tips. It's like my clients are doing very, very, very well, and I don't want anybody else to do well for free. I'm kind of greedy that way.
Oh, okay. Well, I will not take that personally and quit listening or anything.
No, not at all.
I mean, I wouldn't do that, but I think you're allowed to have one bad mood per year.
Well, you're awfully.
He's over his quota.
Sherry, you're awfully nice to me. You're not the normal. You're nicer to me than you should be.
Yeah. Okay. Well, I'll remember that one too.
Okay.
Okay. Thanks a lot, Mike.
You bet. Have a good one.
weekend. Bye-bye.
Bye-bye.
Well, if anyone wants to hear Mike's self-defamation of character, I'll have it on the website tomorrow. Okay. So last week's show, I'm a little behind.
Good.
So if anybody wants to hear Mike hate himself, again,
lose that show. No, I'm kidding. I'm kidding. So, yeah, here's what people aren't ready for. This is the average age of the car on the road in the United States is as old as it's ever been. That's due to two things. Cars being made better than normal, than they used to be, and two, nobody having any money that they feel like parting with going to buy a new depreciating car. Okay?
Yeah.
People are going to start to buy cars. You're already seeing it. Okay, you're already seeing it it's not across the board, though. This is what confounds people. Oh, the automotive sector must be perfect. No, it's not. There's a few automotive companies doing significantly better than other automotive companies for some very specific reasons. Case in point, Ford's head of design and research, head of design is Jay Mays, and he's designed several cars that are amazing. The Beetle, the Audi TT, oversaw the Ford Mustang, things like that, the Ford GT40. The head of research and design at General Motors is a woman that was the head of human resources department for 31 years. Human resources head, doesn't matter if they're man and woman, I'm just being specific so people know that I do my homework. That's the head of the new research department. That's the department that picks what the new car's going to look like. So the head of that department is somebody that's a lifer at GM. That's strike one. And they've been head of human resources for 30 years. I think that would be strike 2 and 3. Why the hell would you have somebody like that at the top of research?
Yeah.
Go figure. So that's why General Motors, for a long time, will probably be less profitable than its competitors.
You never want someone who doesn't work in the office to make the office rules.
Yeah. Well, she can manage people. Well, pick one of the research people that works with people. Well, make them the head of the department. Go figure.
She can stop us if we name the car something racist. So, other than that.
Do you see what I mean, though, about that? I mean, it's insane. So people aren't ready for... let me talk one more minute. Okay. You're causing me to break too often. I want to rant and rave, and you're stopping me.
You have to do 3 because you scared me last hour. I got to admit, my hands are a little sweaty.
I know, but it wasn't scary.
It was very scary. You know what? That's the type of thing that a person says when they're driving the car on an icy road and it starts to slip and slide all over the place. And as the passenger who has nothing to hang on to goes, "Man, that was scary." You're like, "It wasn't that scary." It's exactly what just happened.
No, it happened some minutes ago. But I was being nice about it. You just thought I was going to go off on a rant, and I went up. And I went back down.
You accelerated on the ice, and then you started to pump the brakes.
I didn't do the Obama where you go up, you will go up again, you go up one more time, then you go up quicker, and then you go down. That's his speech pattern.
Oh, okay.
If you think about it. I don't do impersonations, but that's his speech pattern. I'm going to go up, and I'm Obama again, and you go up one more time, then you go up a little bit quicker, and down.
All I know is the Bill Clinton fist pump thing. That's all I know.
Okay. Let's take a break now. I'm Mike Wren. It's the show Smart Investing. You're listening live at 590 KQNT AM. Why don't you be a caller? Telephone number is 509-241-5900. We'll be right back.
This is Smart Investing with Michael J. Wren.
I accidentally saw your paycheck. Well, I hope it was inspirational.
This is Smart Investing with Michael J. Wren and Michael's co-host, Chris Martin.
People are smart. They can handle it.
The person is smart. People are dumb, panicky, dangerous animals, and you know it.
Okay, we're back. I'm Mike Wren, host of your show Smart Investing, where we try to make this topic of investing easier to understand, and we try to make it entertaining too. So, more demand in housing is not what you're ready for. By the way, telephone number to the studio, 509-241-5900. So one of the points in economic terms that most people are not ready for, better than expected news in housing. Okay? Housing is such a big part of the economy, and it employs so many people that it can really move the unemployment meter. Okay? And it affects a lot of different things. Automotive is the same way. Manufacturing a car, there's a lot of sub-industries that equates to more time on the job or somebody having to hire, at this point, just more profits. Now, remember, these companies are going to have more profits, and they're going to have to utilize everybody that's working for the company before you have the company actually go out and hire somebody, correct?
Okay.
That makes sense.
Yeah.
So for you, the listener, it makes sense that the market will go up prior to unemployment going down. These companies have to make the money first before they're going to be willing to hire somebody. They could hire somebody already, but they're not willing to. They want to max out all of their resources and have money in their pocket before they hire a new person. So the fact that you're going to see people in the stock market making money before you see more people going back to work, that's normal. It's not a bad thing. It's not a good thing. It's just a thing. It's just
something happened.
Yeah, it's just something that's normal. So if you get better than expected auto demand and better than expected housing demand in really, really big ballpark figures, that's good for 0.5% of gross national product, GDP or GNP, which means that everybody's willing to state the fact that we're going to have 2.4, 2.5% GNP growth. Well, what if we have 3? It's a little bit of a different ballgame. And I am talking about these numbers. I don't really want you to understand them all that much. I'm kind of doing this as a rebuttal to everything else you hear. Now, people aren't ready for Congress to get into a better mood where they actually come to agreements more quickly. That's seen as a positive instead of gridlock. What was your question earlier?
Oh, is there any way, because we get calls like this all the time. Oh, I was going to invest in something, but I hear this law might be in the past and all that. Is there any way that the politicians, with all the arguing and bickering, can just screw it up somehow?
I think no. Because truly, can the politicians do anything right now from you if you had the money to go want to buy a brand new red Volkswagen? I think no.
Yeah, I mean, There might be some weird tax law that I got to pay $5 on, but it's still, that's what I want to buy, that's what I'm going to buy.
Right. It's not going to affect your behavior. If you've decided that you want this hamburger, you're going to buy it. If you want to upgrade the phone, you're going to do it. If you want to take a trip, you're going to do it, and on and on and on. So I would submit to you, the listener, and to you, Chris, yeah, it's one of those few times, well, actually, no, most of the time, they can't affect us as much as you think. Here's something else that people aren't aware of or probably aren't ready for. There's a whole energy renaissance going on in the middle part of our country. Remember, there's some people that are really angry about, I think it was Obama, where he did not okay that pipeline to go from the oil sands of Canada all the way to the Gulf Coast.
Oh, I will take your word for it.
Okay, something like that. Okay. Everybody that wants to focus on the fear focuses on that one particular event. There is still a huge natural resource event going on the North American continent. It's so powerful that it's predicted by the year 2014 that the United States will no longer import any oil from Africa.
Now that I've heard.
Angola, Nigeria, all of that. Done. Okay? The reason is not only do you have the discovery of natural gas and fracking and so on, you have additional oil discoveries here in the United States, and the oil happens to be what's called light sweet crude, which is the stuff that we buy from the Saudis.
I've been called that.
Okay. Light sweet crude?
Yes.
Nice.
All three of those at the same time.
Now, unfortunately, for some of the gasoline refiners, this gets into a little bit of detail, but I want to back it up and just instead of throwing it out there.
Well, no, if you know details, that's better than just, I heard a rumor.
The refiners that are on the Gulf Coast, which are typically where a lot of the gasoline refineries are, when we had oil prices significantly above where they are now, these refineries retooled to use the dirtier, more higher sulfur content oil that comes from Canada, the Athabasca oil sands and things like that. And that's what that pipeline is meant to do, is to bring it from Canada to those refineries on the Gulf Coast.
Okay.
And it's a dirtier oil that needs it needs to be more refined. It's also cheaper than light sweet crude. So these oil companies decided, well, let's retool our refinery so we can buy the cheaper stuff and refine it into gasoline and diesel and on and on and on.
If you want something done, we'll just do it ourselves.
Right.
Okay.
And so I have a feeling that the pipeline's ultimately going to be built. Now, you would think a person might say, well, if they just discovered the light sweet crude here in the United States, there might not be a need to pump it from Canada to the Gulf Coast if we've discovered more of our own oil inside our own border.
Mm-hmm.
But that's not correct, because it's the different type of oil. It's the better type of oil, but it's more expensive. And so the refiners don't get to utilize the infrastructure that they put in place for the cheaper, dirtier oil, the cheaper, dirtier crude. So they are still, their profit margins are dependent upon the cheaper, dirtier crude. So even when we have more discovery of light sweet crude in our own country, these refineries still want the cheaper stuff, is the point. And you still need oil infrastructure. And you just can't create a pipeline out of thin air. Has to be built. And anybody that watches the news, you know that in North Dakota, South Dakota, Oklahoma, the prices of real estate there are akin to Midtown Manhattan, because there is no unemployment. If you want a job, you can have 7 of them. And the employment rate is so high that all of the houses are taken up in all of these small towns. You have guys living 2, 3, 4 to a room in a house. I mean, really, they're bunking together to try to make that money. That's a renaissance going on. That's going to affect things in the United States. And you continue to have employment in the resource industry. That's going to help our gross national product too. Here's another addition. The chemical industry, petroleums, plastics and things, natural gas is a big input cost to those. Mm-hmm. When we found more cheaper natural gas that's 30% cheaper in the rest of the world, you actually have chemical companies like Dow building more factories here inside the United States. That again just doesn't happen out of thin air. And if you add aerospace on top of that, with having the need to build these new aircraft, and you have the need to build even with reduced spending cuts of defense, you're still going to need the new airplane tankers. When you add up all of these positives, you can easily get to 3.5%, 4% gross national product growth. People are not ready for that. If you have that in place, you're going to be at 15,500 on the Dow in the blink of an eye. So we were getting a call. I'll go ahead and let you take that, Chris. So most people are not ready for this type of good news. And in as much as anybody wants to bring up any bad news, it's really not enough to offset all of this. And I don't have to be right on this scenario. What I'm trying to do is just paint a picture that is the picture that people are most not ready for. I think people and investors are ready for more bad news. You're ready for Congress to be gridlocked. You're ready for the economy to actually shrink and even us to have a down market and to go into another recession. But I think everybody's ready for that. But nobody's ready for things to actually get better before we have another down market. So we have a caller.
Yes, Ben wants to talk to you about technology.
Okay. Ben, thanks for calling the show. Go ahead.
Hi, Mike. Ben Ankles. Long time no talk.
Well, hi. I know who you are. Go ahead.
How's it going?
Good. How are you?
Good. Hey, I hear you talk about these big-ticket items.
Yeah.
And the thing that hasn't come across yet is the amount of money business has to spend in order to upgrade their technologies that they have not spent a dime on in the last 5 years because they've been too afraid to spend money.
You're right. There has any type of recovery that we've had, we had lots of capital spending by companies from, let's say, 1997 to 2000 or 99. You actually had people, by the way, for the other listeners, this Ben, he's in the telecommunications computer industry. He knows what's going on. Remember, Ben, when you had people like the telecommunications equipment providers like Lucent, they were actually financing the equipment purchasers of their customers?
Of course.
Yeah, and then that didn't go so well. So anyway, yeah, that big part of the economy, the last bit before the bubble burst, there was almost no spending by the consumer, and it was all capital driven. And you're right. Companies have been very, 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 very cagey with their cash. They've not upgraded computer systems, and they've not spent on capital improvements like they usually do. And that, again, would just be another benefit to the economy. Don't you agree?
I think it is, but I also think that, unfortunately, it's a jobless spend.
Yeah.
In other words, industry acquiring upgrades, when you look at the productivity gains, everything they've done so far is try to squeeze as much productivity as they can out of their people through technology upgrades to stave off hiring.
You're right.
That's still going to be the case. You're going to have billions of dollars spent in technology upgrades without really creating jobs.
Well, yeah, and I wasn't talking about so much creating jobs. We can have 3.5% GDP, and with little job creation.
But I think that's an important note for folks.
It is.
We can have really, really, really healthy gains in the overall increase in the economy in spending, but that doesn't translate to jobs.
Right, and that's good and bad. For the people that are scared and still own bond investments, that's kind of okay for them because you really need hiring. Hiring is usually one of the first things that kicks off inflation, is when you have somebody getting 50 cents more per hour or something like that. That's one of the biggest components to inflation. If you don't have hiring, that keeps inflation at bay, but it also keeps people invested in the bond market longer because they don't get beaten up by rising interest rates. So there's kind of a good and a bad thing there going as well. I would like to see more jobs for people, but it's just going to be more and more competitive. For somebody to be able to be hired, they're going to have to up their education level. It's, I think it's kind of always been that way. The world marches forward, and you can't make buggy wheels for forever. You've got to learn how to do other things.
Well, I mean, for example, Apple announced that they're going to start manufacturing in the United States.
Mm-hmm. But I don't
Wonderful.
know. I don't know how many jobs that'll be, though.
Minimal, because it'll be all robotics.
Really? Yeah.
Yeah.
You would know. You know more about that stuff than I do. So, is that
anyway,
it?
I just wanted to call in and give you that tidbit on my my radar of things.
Well, cool. Thank you.
I know you have other things to talk about, so I'll let you continue with your day.
Okay, thanks, Ben. You have a good one. Thanks for calling the show.
Okay, bye.
Okay, bye-bye. Ben is a very, he's in the business world. He's an entrepreneur. He's very, very smart with stuff, and he's right. And it's kind of cold, but when we're investors and we're talking about profits, I'm not so concerned about unemployment going down. I'm concerned about my clients making money. That may sound cold and all that, but you can only have so many things to watch under your pay scale. So I'm not the general of the Joint Chiefs of Staff, and I'm not president of the United States or head of some union, but I just run my clients' portfolio. So it is what it is. It's just one of those cold and hard facts of life. But I appreciate Ben calling. Let's take a break. My name is Mike Wren. You're listening to the show Smart Investing. Telephone number here to the studio is 509-241-5900. We'll be right back.
This is Smart Investing with Michael J. Wren and Michael's co-host, Chris Martin.
Maybe we should chug on over to Mamby-Pamby land, where maybe we can find some self-confidence for you, you jackwagon.
Hello, everybody. We're back with the show Smart Investing. I'm Mike Wren, your host. So, Chris, let me get your opinion. Do you think that we were somewhat successful on today's show by painting a picture that the average investor would have no idea of how to paint themselves? In other words, a more positive than normal picture.
Yeah.
Point by point.
Yeah. That's kind of human nature, I think.
Well, yeah, what I'm trying to do is give the listener something that they won't hear anyplace else and back it up by a few bullet points just so they get a different perspective. I'm not saying that it can happen. I'm saying that it's possible, and it's the thing that to most people is least probable. But therein lies the beauty.
Okay.
If it's least probable, we might be getting enough deal that it doesn't matter when we're right. You only have to know that spring is coming. You don't have to know the exact day. If spring is going to get here and you know that there's going to be a lot of sunshine, there's an old saying that you buy your straw hats in the wintertime. Straw hat for being out in the field picking.
We buy winter coats, in June if they have them on sale.
Right, or you can get a 2012 year car for a cheaper price than you can get a 2013 branded car. Mm-hmm. Okay, you can get sometimes if there's any left, you can get good deals on last year's snow skis. When people own retail stores, they'll be making purchases 6 and 9 months ahead, which deals with a different season.
Right.
Okay.
Right. We have that at our store. We have a magazine and that has everything that we can order that is coming out in 2 months, and we beg people, read this.
Yeah.
It's free for you to look at. If you want to see something you can buy earlier, here's your chance. And people won't do it.
Right.
They'll just go, well, I'll just take my chance when it comes.
Well, people can understand that they get a good deal on the straw hat no matter when they buy it because it's ultimately going to be sunny, and they know intuitively that it's a lower price right now. I wish people could think the same way about companies because that's it. Just think of this. Companies, like the caller Ben said, they have not spent any money on capital infrastructure, okay? They haven't spent any money on new hiring. You have a bunch of positive things going on. So it stands to reason, just from the big picture, if you were looking from a satellite, that, wow, the general economic feeling of things could easily be better for the next 8 years than it could be for the last 8 years. Game over. That's all you need to know. If you think that way, it completely defeats needing to own everything in bonds, everything in cash, and it completely defeats having to listen to people that want to sell you insurance products and annuities. You can shun all of that stuff. You can leave as much in cash as you need in cash to keep yourself comfortable, but then you can invest the rest. You don't have to take these packaged product positions and have people manage risk for you. You can tell what the risk is. The biggest risk is that you won't participate in the next portion of good news. That's the biggest risk. And that's what's going to happen to most of you listening to this radio. By the time that you are psychologically ready to look at something different, by the time that you are psychologically ready to accept good news, guess what? The market will probably be at 15,500, 16,000 by then. I'm talking the Dow Jones Industrial Average. And you will maybe spend a week thinking that things are good and you should invest. The 8th day, week 7 days, one day after a week goes by, guess what you're going to be feeling? That you're behind again. That you've missed the market. That you've missed participating in all this, and you kick yourself again, and you're going to do one of two things. You're going to either wait for the market to go back down, which is wrong, or you're going to commit too many assets to the market and investments and scare yourself at the next downturn. Both of those scenarios are not helpful to you. You need to get right with your psyche right now, your own ethos. You have to figure out, you have to yank yourself up by the bootstraps and shake the you-know-what out of yourself and say, okay, things are probably better than I realize now. Try to make yourself feel that way. What kind of decisions would you make with your portfolio and enact them on Monday, okay? Get to it straight away because things, I don't think, look that bleak. And the biggest risk of all is that you will put everything into the market at a market high and you will sell everything out at the market low. That's already happened. Most investors really put a lot of money in investments in 98 and 99 just in time to get shellacked for 12 years in a row. Now that the market is down and has been down for a while and has been at reasonable levels, you think the world is going to end like the Mayans, and so you haven't been doing anything. You've already missed the really, really, really easy money. Now you're going to continue to miss out until you whipsaw yourself again, and you're going to look in the mirror and you think that you've missed all of this participation. You have to do something different. You have to change your behavior.
We get accused all the time of being too optimistic. That's why some people don't listen to us.
Perfect.
I've heard that before. You guys are way too optimistic. It just feels like you're selling something.
And that's awesome because I don't want I would never talk to those people at a bar anyway.
They're the ones in the corner drinking alone.
Yeah, or doing other things, frankly. I'm Mike Wren.
Wait, that escalated quickly.
Yeah, I mean, seriously, people that are too negative do bad things. I'm Mike Wren. It's the show Smart Investing. You can find me on the web at smartinvestingshow.com. You can contact me at my office of Wren Investment Management, spelled W-R-E-N. Telephone number to the office is 888-747-5181. Have a good weekend, and I hope that it warms up today.
Any opinions expressed herein are given in good faith and are subject to change without notice and are correct only on the stated date of issue. Past performance is not always indicative of future results. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Security, financial instruments, or strategies mentioned may not be suitable for all investors. Prices, values, or income from any investment mentioned in this report may fall against the interest of the investor, and the investor may get back less than the amount invested. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as a recommendation of particular securities, financial instruments, or strategies to you. Before acting on any recommendation on this material, you should consider whether it is suitable for your particular circumstances and, if necessary, seek professional advice.